Start recording. Alright, so basically today's topic, again is the Ultima screener and the tracker walkthrough and guidelines. We will walk through the settings from the screener and basically walk through all the options. What functions is there? All the methods and all the settings basically replicates the Ultima's strategy, which is based on market structure cycle and range cycle. So it basically targets on primary on the prime setup, which is from market structure for trend trades, and golden templates from the range cycle. Golden templates, aka manipulation cycle. Stuff like that. So let's walk through the settings. So let's hit the first setting maybe from the bottom. So we have a 40 tickers available here, and just first thing, there is blocks of 10, so 1 to 10 it's by default shows first 10 tickers assets. So we instantly enable 1120, 2130, 3140. So let it load in. So basically there is instantly two versions, the market structures version and range version. Market structure will be based on Ultima market structure cycle. Basically everything regards the market structure, liquidity, power index, and so on. And another version will be range version, which is based on manipulation cycles and golden templates. Can you start with the naked chart and build on like did yesterday? Yeah, sure. So basically as I go through the settings, I will add we walk through each market structure range, and I will basically explain everything, setting by setting. So basically so now, as you can see, we have 40 assets, 40 tickers on the chart. So that's basically gives us this column right there. So basically if you go here in the info, you have info, following info section. So it basically covers every single function, option, setting what we have here, and you can walk through, and it will explain what each function is meant for and what's used it for. Like I said, we enabled 40 tickers, so basically you can screen 40 markets. The first column is basically by default all forex and some indices and stuff like that. So whenever you click on this, you can change whichever market you want. You just type whatever you want, it will basically save. You spare OK, and it will save whichever asset you change here. There is sticker columns, which is 1, 2, 3. It's basically will swap. So at the moment you can see here is everything what we have in this first column. If we change to number 3, let's say, it will change to this column. So there is 1, 2, 3 columns. So third, by default, the first one is forex, second one is crypto, and third is stocks. So we're gonna give a minute or so it's gonna load in, and it's gonna basically screen all the stock pairs which you have saved here. So that basically allows you to, in total, changing by ticker column 1, 2, 3, it allows you in total screen 120 markets if you want. In the same time, let's cover the general settings instantly. That will be this section right there. So basically this is colors for the table background and for letterings. So let's go back to 1. This allows you, table 2, table 3 allows you to copy paste multiple tables. As I said, we have a one is market structure version, is another one is range version. So basically this at the moment is table 1. If you want to add another one, you basically copy paste the same indicator. If you disable this, you can see there is another one. So we go in this one, I have a setting range. So let me enable all the tickers for that. On this one right there, I will remove spets. So basically it will remove the ticker names. And on the first column, the first table, I will change to table 2. So basically table 2 will move next to each other. So basically what it's gonna do, it's gonna display 2 tables each to next to each other. So basically this way it allows you to see the screening the market structure and allows you to screen the range for the same tickers on the same time frame. Basically you can even if you only interested, like, you know, on the market structure or range, you can literally copy paste like even 5 of them and just, you know, on the same time monitor like daily, weekly, monthly, quarterly if you want, or, you know, whichever time frames you want, as you know, as many copies you want basically. So the instantly in these settings on the bottom you will have a warning. So it's basically gonna say that a range version loads way longer just because it's so much data there. Then on these general settings, as you can see, this table will be number 2 and the range table will be number 1. On the range table we will remove the spets, as this is the range table. We'll remove the spets. Spets basically says we're removing tickers, so it's basically displays ticker just once, and then it displays all your, like here, all your market structures column, all the signal range columns, and then it displays all the signals, you know, all the info from the ranges. Then with this the table height, so you can adjust table height and table width. Width you adjust, so these 2 settings is basically, you know, if it overlaps you can adjust it, or if you don't want a gap you can adjust the, you know, the width with it. The height and width is really depend of your screen size and how much you have a zoomed in out if you're using the browser and, you know, font and stuff like that. So depend of your screen, and so you can easily adjust it, that stuff. And this is location, basically either it allocates the table top right corner or bottom right corner. So if you using not 40 but maybe like 20 tickers, like not whole is half of it, then you can, you know, change one maybe on top, one on bottom, or, you know, stuff like that. That's regards general settings. One more thing is multi-time frame. Basically what time frame you want to screen it. So in this case, like I said, we are screening the same daily time frame. We at the moment on 30 minutes. The lowest chart it will work, I think it's 15 minutes. If you go lower it will have a memory crash because it's so much data there. So yeah, 15 minutes, 30 minutes, fine. So if we change this to weekly, it's gonna screen all the info from the weeklies, ranges, weeklies, market structures, weeklies time frame, right? So that's kinda it regards the ticker settings. Straightforward, you know, we can enable 40 blocks of 10, column changing assets. You can save and edit whichever asset you want just by clicking. That's the table adjustments. So if you're using multiple tables, adjust them nicely next to each other. the time frame to change. And like I said, there is two versions. One is for market structure, one for range. If you want, you can use 3 copies of the market structure, 3 copies of ranges, whatever, right? Yeah, you can stack together 3 tables. As you can see, there is table 2, table 3. So it's a good idea maybe in next update, because there's a lot. Yeah, because if you're using pairs of like daily market structure and range, that's already 2, so it's a good idea to add table 4, so you can use 2 time frames like daily market structure range, and then maybe, you know, weekly market structure and range. But I think mainly people will use just 2 tables, and then basically if you want to monitor weekly whatever, you just swap between the time frames and loads in, and you will monitor it. But you know, in future it's feasible to add maybe 4th if you know you want to see double and double stuff like that. Or if you're using just like, you know, just market structure or just ranges, are able to, you know, 3 time frames, it's like 8 daily or weekly example, or daily, weekly, monthly example for the ranges example, and you can track all the things. So let's go. The main thing, like I said, if you put on info, it's already will explain every single thing like that. So we can go one by one. So let me disable range 1. We will go through the market structure first, and for that visual explanation we will add Ultima market structure tool, so market structure cycle 1, so we can walk through the, so as this daily displays everything, we will walk through the market structure 1. Actually, let's go first through this column, which is the signals, and then we cover the prime one, which is market structure. For the signals, we will use most time frame signal box. Basically, what's that? That's basically you have options to choose time frame and to see signal being displayed on the chart as the signal range, basically. So if we go cat GPY, we go in the list, so basically this first column covers signals. We go in settings, it covers inside bars, reset bars, outside bar bullish, outside bar bearish, first green bar, first red bar, triple highs, triple lows. So it's on daily time frame, so it will display which pair has a what signal on the day. Like basically, as you know, signals presents as the previous range, right? What the signal displayed previous range, created previous range. So on this cat GPY, yesterday we established first green day and had a peak formation low and had a volatility increase, which you can see from the multi-time frame signal box. So what is the first green day? That's continuation signal, right? Continuation signal says yesterday we manipulated low and we close as a bar, right? So what we're expecting today, we're expecting continuation. On our education section, there is special section for signal ranges, which gives guidelines how to work with, you know, previous high, previous low, previous 50%, and what's the importance, significant importance of the open price, right? Because it's been a continuation signal. We want to look for low of the day, low of the sessions for continuation setup, right? So the most attention we are putting on the open price and 50% to see sign of strength for market to go and target the previous day's high. So basically this was easy continuation setup. If we can say that is, you know, 8 hours peak formation low, 8 hours manipulation low on basically session trade for continuation low of the day. So basically it's low of the day golden template by Ultima setup, and then on the London is pull back to the 50% pullback correction impulse again. So so basically, like I said, this signal column shows USD NO USD NOK. We had double inside day, first red, triple O's. So every day it changes based on what, if there was established signal range on that specific pair. So you know, it's basically, this column is the same as a multi-time frame signal screener. It will give the same signals. And on this multi-time frame signal box, like I said, you can walk through and backtest it, the signals, if you want, through the different pairs. That's kind of straightforward. Like I said, you can adjust whichever ones you want to see. I usually I don't use first green, first red, or bullish outside bars, bearish bars, or reset bars. I focus mainly on inside ranges and triple lows, triple highs. Because I don't focus on continuation signals, basically because I'm specifically utilizing manipulation cycle, which basically gives me already all the info what I need regards the where is the last manipulation and does its continuation or reversal. So, but mainly I'm interested on inside bars and on inside ranges. Sorry, I changed the wrong one. Yeah, on inside ranges and triple lows, triple highs. So basically inside ranges for, you know, sharp reversals, sharp breakouts, and triple lows, triple highs for anticipating the, you know, pullbacks, reversals. So that's it regards the signal range. Again, you can adjust it, edit it, and disable whichever you want. So next one, we'll go to next column. Next column is this traffic light symbol, which means the prime setup. Prime setup, where basically we are monitoring the market structure of the specific time frame, market structure, and power index. Power index is like a representation of imbalances on that time frame, and shows us the aggressive buyers or sellers is in control. And that's two dots. The first dot is market structure, second one is power index. And if they unsync, that's mean that pair is primed up for trend trades, bullish or bearish. And if there is combination of, you know, yellow green, yellow red, or yellow green, that's mean it's in transition to establishing bullish or bearish trend. So let's go one by one on this one. So we go one by one. The first one is the ICI, which is basically impulse correction impulse. It's either positive or negative. If you look at the chart, let's say GBP AUD, we have a bullish ICI, which represents as the plus or minus. So basically what this is ICI, actually let's go GBP AUD first. So ICI stands for impulse correction impulse. So basically, if we are anticipating, if we have a impulse and we have a structural low, structural high, our market pulls, and we have a bullish market structures break, and we have a pullback to 50% of this structural low, structural high, and price is in discount basically, then we anticipating for this correction to over and start to moving higher again. So basically what we are looking for in that point, we are looking for sign of strength on daily range. So again the GBP AUD, this one there, we have a plus. So what we can see, so basically on this Ultima market structure cycle tool, we have enabled all the daily. So we have daily's market structure, daily's liquidity, daily's power index, daily's market structures cloud. Daily's market structures cloud basically tracks the latest structure on the daily's time frame. So we can see the last structural low is this and last structural high is this. So this is the latest impulse, and we can see this latest impulse established bullish market structures break. Let me change the labels to larger. So this impulse basically established bullish break. So its first condition is true, so we have bullish break, and now we have a pullback back to, as you can see, this midline. It represents 50% of the structure, right? So basically bullish ICI will be when we have structural low, structural high. So basically bullish ICI is when the price pull back in 50% in the discount area from the bullish market structures break. So market structure is bullish and we have a pullback 50%. Why 50%? Because on any pullback, 50% is just normal standard healthy retracement. So what we are looking at this bullish ICI, impulse correction impulse. So basically we are anticipating strength here for market structure to start to break out, right? Start to trend. So what specifically we are looking at this, day? We are looking low of the day with sign of strength, right? We're looking for some kind of sweep. This is New York. That's New York's 8 hours. Basically, we're looking for sweep, golden templates, for moving higher. So basically, anticipation is that from this point, we had low, we had high, we pull back 50%, and now we're targeting this structural liquidity. Example, maybe before, so it could be example here. So we had a structural break right here. We swept the high, we swept the low. We have market structure bearish, and at this, so market structure's job is what? Target liquidity. We have liquidity here. So at this point, market structure was bearish. So we had a structural break. So market structure's job is to establish trend. It's established trend, and target is target liquidity. So it's move lower, scan the pullback, created structural liquidity right here, took out the liquidity, pull back where? Pull back 50% from this point to this, as you can see here, and provided perfect high of the day short for anticipation that structure just pull back and gonna target again liquidity. It's move all the way. You can see it's created multiple lows. At this point, we establish market structures bullish break. Again, we anticipating what? Pullback 50%. It's pullbacks 50%. That at this point right there would be bullish ICI. What we anticipate, again, breakout, target, high liquidity. As you can see, over here we pretty much chopped around constantly, hit the highs, hit the lows, structural highs, structural lows. So it's kinda been all over the place. Maybe some better example. Let's check here. We had a structural break right here. Unfortunately, we didn't pull, but if this was dip in 50%, that will be exactly bullish ICI for continuation. But you will find, tons of examples where you have a, pullbacks to 50%. That's one of the reasons why we are tracking impulse correction impulse for trend continuation trades. So that's regards ICI, impulse correction impulse. You can disable it so it's not gonna be there. Next one, CE, which brackets, it stands for contraction expansion. So if you look at the table, you will see the brackets around the first dot. As we mentioned, the first dot represents market structure's condition. Market structure bullish trend, bearish trend, bullish trend, failed breakout, failed market structure's break, bullish trend, failed break, bearish trend, bearish trend. So basically the first dot represents market structure, and you can screen what condition is each market structure for each pair. So when the bracket is around, that means the structure is contracting or expanding. So if again we go to the market structure cycle tool and we hit contraction, so what's gonna display is gonna highlight the market structure's cloud wherever it's had a condition of contraction or expansion. So at this point we enabled contraction, and you can see it's highlights here, highlights here, highlights here, you know, highlights wherever we had the contraction. What's contraction? Contraction is basically when we start to create higher lows and lower highs and higher lows. So basically structure starts to, like example here, structure starts to move lower, structure moves higher. So basically it's coiling down, starts to squeeze, start to, you know, contracting basically. Why it's important, or what's the benefit of it? You will notice it that most of the time when we have a breakout, or you know, when we have a starting the trend, most of the times structure will either coil down, aka contract, or it's gonna start to expand. We're gonna cover in a second. So what we are focusing when we have a contraction or expansion? When we have a contraction, we again focusing all the Ultima's strategies focusing on high of the range, low of the range, right? So basically, soon we have a market structure's contraction. We know that's the most highest probability when the structure is changing. We don't know is that will be a reversal or that will be continuation, right? Because it could be either reversal, trend reversal from down to up, like here. In this case, again, from up to down. In this case, up, reaccumulation up. In this case, again, down to up. So we don't guessing, you know, is it gonna be reversal or continuation? We simply know focus on high and low, and we anticipate we most likely could have volatility increase, and we can start the breakout and start the trend. Regards the either that's bullish side, bearish side, you simply look at high of the day, low of the day while it's contracting, and we look high of the day, low of the day, and look regards the market structure. Is it we are establishing bullish market structure, bearish market structure? We're looking at manipulation lows, manipulation highs, but basically when it's highlights contracting or expanding in the brackets around the market structure's dot, you simply basically focusing on high of the day, low of the day setups, like high of the range, low of the range, and anticipating, okay, we might break out. If we are breaking out, what's the market structure's job? Market structure's job is what? Establish trend and take liquidity, take liquidity, take liquidity, take liquidity, right? So on this point there is like your risk reward is huge, because you can, you know, focus whenever there is setup for high, low of the day, low of the day, or even high of the day, not even looking, you know, which direction market is coming from, what does it done, when was last liquidity sweep, where is market structures break, and so on, so on. So basically, you know, it helps you with targeting days when, you know, their market structure is either coiling or expanding. So if we go back in the settings and we hit expansion, now it's gonna highlight whenever market structure is expanding. So expansion will be opposite, where contraction was when we're making lower highs and higher lows. Expansion is completely opposite, where we make one side expanding and another side expanding. So example here. So example here, structure makes high, new higher, structure low, new low, new low. You can see how it starts to expand. Regards the expansion happens usually after either fail breakouts on the structure, because it's constantly hitting liquidity one side, another side, one side, another side, right? And it creates new structural highs. What I noticed most of the times happens for continuation, trend continuations, together with ICIs, like example maybe here. So we have a expansion, we hit the swept the high, swept the low. So soon we swept the low, that's bearish market structures break. So we pull back to 50% of the structure for continuation, right? Again, we hit the low, it's still market structure still is bearish, as you see this line. We again take the liquidity, pull back 50%, again move lower, retesting that market structures break, and now establish bullish break and start to go opposite side. Maybe another example like here again. So at this point, this day, we are expanding. Why? Because we hit the low, hit the high, so structure creates new high, new low. So market structure is bullish break. If it's bullish break, we want to see if it's pullbacks. We don't know if that pullback this is fail breakout, or it's just a pullback targeting opposite liquidity. In this case, it's respected this actually this point, it was created from here. So this pullback went here under 50%, and that will be impulse, correction, impulse. So from this point we knew this sign of strength from low of day was to continue market structures break, target this liquidity. So that's regards the expansions, contractions. And when expansion is volatility already increased, when contraction is, you can expect that volatility will increase. So that's regards contraction, expansion. And the screener, as I said, it displays as a bracket around the first dot, which represents the market structure's condition. So again, you can disable and you can go to the next one. Next one shows VLT plus, which basically says for volatility increase, but it's displays as the explosion sign. As you can see, many pairs today had a volatility increase, most likely because of the volatile moves like last days. So it's basically tracks last 100 days, what's the average range, and if it's higher than it's reached higher than average, it says okay, it's increasing, right? Especially when we have a news or stuff like that, it starts to pick up. How you can visually see which days for backtesting purposes, you can use signal box, because in signal box it will display the volatility increase. So basically you can see this day had a volatility increase. So basically on signal box, whichever day you have enabled as the signal, it's gonna display which days we had volatility increase. And if you guys go to multi-time frame average bar range tool and add it and check at the daily range, you will see, and you will be able to backtest it average bar range on the daily on the chart, so you will see, you know, which days we had how much was the volatility, and you know when it's increased and how it's increased. So it's basically you're able, but over here it's just Nelson saying, I think many of these pairs are coming out of inside days. Yeah, exactly. So whenever, like I said, it's basically a raw measure is like it measures last 100 days for daily, like last 100 ranges. What's the average range? And if the current average range starts to move, average bar range on daily, it starts move higher than average, because 100 is a lot, right? It's not 30, 20, 100 is a lot, so it's kinda high. And if it goes above that, it's like you know, many of pairs starts to move. The best, like I said, is to measure that specific. If you're interested in like cards, what's the, you know, in number wise, it allows you to screen which pairs are, you know, most volatile and stuff. It's through the multi-time frame average bar range. So that's regards VLT plus. Again, you can disable that. Next one, market structures phase, either bag or happy phase. Basically 2 phases we are tracking in market structure. The bag means accumulation, and happy phase means the trend. So basically on the screener, again, you can see this icon. So whenever you see the bag, you know it's in accumulation stage, and whenever you have happy phase, you know it's the trending stage. So which trending stage is this? Is it bearish or bullish or what? So basically you will look this together with the market structures condition, market structures. So we can see bullish market structures trend, so it's bullish trending stage, bearish trending stage, bullish trending stage. So accumulation with failed breakout, so trending stage, bearish trending stage, right? As you can see, triple low, so it's been trending downwards, hitting these lows constantly, right? So how it looks on the chart, again, we add the market structures version, market structure cycle on the chart, and actually let's go 1 hour, so it's kind of easier to, because daily structure is quite big. So we go in here and disable expansion, we don't need that anymore. So basically mainly what we need is the market structures cloud. So basically whenever price is inside in the market structures cloud, that will be accumulation phase. All right, that will be accumulation phase. So it will show whenever price inside in the cloud, it will show accumulation bag. So it means we in accumulation. Does it can be accumulation and bullish like here, like GBPUSD? It's accumulation phase, but shows market structure is in bullish trend. Right, market structure is trending, but it's an accumulation phase. So example, like let's check here, right? So over here we establish bullish break, and if the price goes above the cloud, get outside the cloud, that will be happy phase, right? If we come, so it will be bullish trend, because we have established bullish trend, and we will be trending above it, so it will be show the happy phase. If we come lower and we hit this side, so that will be hit the liquidity of this structure low, that will instantly create what? Market structure, bearish market structure, right? And if we move lower, the price comes out, that will be happy phase with red thingy, which basically says we are trending and bearish trend. So let's see example where we have a bullish trend, but we have a accumulation phase. So basically what does it mean? It means we establish bullish break like here, and then, you know, what's the market structure's job? establish trend, right? Establish trend and hit liquidity. But then we pull back in the cloud. This is bullish break is still valid, so it will be green because we have bullish break, and then we come back. So basically, if we have a, like here, bullish break, so market structure is bullish trending, but we have accumulation, that means it could be just reaccumulation in the cloud for continuation further. Let's have a look if there is any example like that. Yeah, it will be like example here maybe. So we have a bullish break, we break out, so it will be showing happy face because we're trending, shows, you know, we outside the cloud, shows the green because we had the bullish break. Then we pull back inside, it will still shows green, but this will be accumulation. It's, you know, bullish break, we reaccumulating for going further, back reaccumulating or going further. We failed, we came back, established bearish break, right? So stuff like that. But we can physically check that one on, what was the GBP CAD? So GBP CAD. So GBP CAD. So yep. Actually, it looks like barely above the structural break. But basically what we had here, we sweep the low, we sweep the high, we establish bullish break, establish bullish market structure break. What's the market structure's job? Take out liquidity, take out liquidity, take out liquidity. It's failed, came back in the cloud. Soon it comes back in the cloud, as on that says, it's in accumulation and market structure is still bullish. As you can see at this point, this pullback came back to retest the market structure's breakout, right? But at that point when price was below the market structure, this would show not green but yellow. Why? Because that means it's failed breakout, because we fall below it. As you can see, it's barely above. If that price moves below market structure's break, that will be failed breakout. As you can see, there was a crash. If it crashes, just refresh the time frames or, you know, chart and let it reload. That's regards market structure phases, right? Whenever you above the cloud, it's bullishly trending. Below the cloud, bearishly trending. Inside the cloud, accumulation. Accumulation can be bullish or bearish, depend of market structure's breakout. If we go back, so that's regard phases. Again, you can enable, disable them. The next one will be the main thing, which is the prime prime setup. It shows market structure, power index, and range. The range will be covered on second version on this one, because everything regards the range will be on second table. Regards the market structure and power index, as I mentioned, the first dot is for the market structure, second dot is for power index. So market structure, whenever we have a bullish break and price is above, it will be bullishly trending. Whenever we have a bearish break and price is below, it will be red, bearish trend. And whenever it's yellow, it means we had a market structure's break and we pull back, or we failed to break out. This doesn't mean it's, so basically when it's does the market structure's break, example maybe will be, anyways, let's say it had the market structure break here, right? So price come, broke the structure, establish bullish break. If it's pullbacks, actually like here you can see it's actually done that. You see, we had a we hit this structural point, structural liquidity, and right here we establish bullish break. Price move up, took liquidity as it should do, and then it's fall back. Fall back where? Exactly 50% from this structural to this structural point. So basically impulse correction, not maybe accurately from the high, but basically this is the last structural 50%. It's kind of pull back 50% impulse correction impulse, right? So when we have, so basically once it falls below the structural break, it will be yellow. Like here at this point it will be yellow. When it's established failed breakout, it has two things. Either it's just a pullback to ICI for continuation, or it's gonna target opposite structure, opposite liquidity. If it hits opposite liquidity, it instantly creates bearish market structures break, right? It's established automatically bearish market structure break, maybe for continuation lower targeting next liquidity, or in this case maybe retesting the power index. So as I said, that's the first one is for market structure, second one for power index. What's the power index? Is this line right there, this square one. So again, let me make it larger and disable the cloud, liquidity, market structure. Let's leave just the power index. Power index basically tracks aggressive buyers and aggressive sellers. Where we track that from? We track that from inefficiencies in the market, aka imbalances, right? So when the market hits imbalance, price hits imbalance, we anticipating, mitigating imbalance and aggressive buyers or sellers stepping in to defend and continuation trend, or exchanging hands, failing. Like example here, where you see power index moves from lower and basically price crosses and start to go work around that level. So basically it's where this point sellers was in control. Now there is a level where exchanging hands from sells to buys. As you can see, we had impulse here, so this mitigating move back mitigates aggressive buyers. Aggressive buyer steps in, push the price higher, right? Again, comes back to this inefficiency. This case it's fails, so exchange hands from buyers to sellers. Buyers takes control and move price higher. Pulls backs, buyers takes control, moves price higher, and so on, so on. So basically, and whenever we have a in sync the structure, we go back on this one and enable market structure. So whenever we have a, like here, market structure bullish break, and we have power index bullish, that's the trend conditions, and this is a prime condition. That's the prime setup when the market structure is in sync with power index, and from this point we anticipating for price to start trending and hitting that liquidity, right? We go back and enable liquidity, market structures cloud. So basically here both is in sync, structure green, power index green. We know, yep, basically this time frame, daily time frame on this pair is primed up for starting to trend, and it just hits liquidity. How it will be delivered, as you can see, it's established on Wednesday and been trending up till Friday, Thursday. So it will be delivered by ranges, right? By daily ranges, and that's where we use range cycle. So basically, like here, I would disable market structures cloud because that's not needed. So basically what you want to see is how the daily ranges manipulation cycle works, and where is the liquidity, where is the market structure, where is the power index. from this point your bias is very bullish, and you're anticipating that manipulation cycle daily ranges will deliver market structure's intention to go higher and take liquidity. Range's job is to deliver market structure's intention. So basically at this point you have a prime setup. This pair is primed up, market structure bullish, power index bullish. After this line you want to see how daily ranges delivers intention of market structure to go higher. So what you're looking for low of the day, daily golden templates, weekly golden templates, right? Actually that's, as I said, that's Wednesday, and that's Thursday, like basically whole week was market pumping up, and your eyes was on these liquidity levels, right, from this point, and you're basically looking low of the day, low of the day, low of the day. You're looking for a sign of strength, like here, manipulation low, peak formation low, reclaim of open, time rotation, 8-hour sweeps, time rotation, and so on. So that's regards the prime setup. So basically you want to see either prime setup for market structure and power index to be same color, like red, green, red, or it can be in transition, like here, the yellow red or yellow green. So possibility that from market structure is transition from with the failed breakout to the upside. I know it's moving to the downside, perhaps to establish a bearish break to be in sync with the power index, right? So that allows you to maybe already position in before it's already done, already does the breakout to the downside, the breakout to the upside. You definitely don't want to see something like this where we have a power index green and market structure red, because that's the conflict of the in direction. So that's why that ones is you can ignore it. The ones is in sync is the really high probabilities for establishing trend trades. So, and like here, if you're in this, if you have ICI like reaccumulation inside, and you're just establishing trend and hitting higher. Like again here you're establishing bullish break, power index bullish from this point. Look, it's just trending again, like beautifully. Like here, bearish structural break, bearish power index, bang, drops, takes liquidity. Here, bearish structural break, bearish power index, bonks, drops, takes the liquidity. Absolutely fucking beautiful. The most easiest time to position yourself is in reaccumulation, aka when you're inside in cloud. When it hits, breaks out, it will be volatile because it's gonna fall, right? And you just go again and again and again. It's the same shit, different day, right? Here, bullish break, bullish power index, trending up. Bearish break, bearish power index, trending down, pushing up, bang, again hitting break, power index, market structure continuation. So you can easily backtest it with the market structures tool. How you visually can backtest it is when you go here on the market structure cycle tool. On the bottom you have this traffic light replay button. So change this to daily because we are tracking daily, right? So we try checking daily. You hit this, you will have on the screen the visual when the market structure and power index is together in sync. So basically when both are primed. At which point in the time on the chart you had a in sync market structure and power index. Like here you can see it shows from this point power index bullish, market structure established bullish, start to trend. Here you have a in conflict, right? Power index bullish, market structure had a what? Bearish, right? So it shows yellow. Whenever it's red, it's prime bearish, prime bullish, prime bullish. Transition, kinda dodgy. Prime bullish, prime bullish, prime bearish, prime bullish, in conflict. So you can backtest it, the prime setups for market structure and power index, basically through the market structure cycle tool. And if you want to see visually when market structure was bearish, bullish, in transition, you can use this. Or if you want to see when the power index was bearish, bullish, you can use that one. For me, whenever I've backtested, weekly price action from different pairs or whatever, I just use this. And you can use for any time frame. You want to see, monthlies, weeklies, 30 minutes, doesn't matter. Works for the same thing. So you disable this. Like I said, it's perfect for wonderful, perfect for backtesting. Just reading the chat. So regards this, yeah, that's it regards the settings for market structures version. So now let's enable range version. So range version basically covers all the indications of what we need. Just last comments regards the market structure. Like I said, the easiest trades is with the prime setups, right? Because like we can go some, I don't know, random pair. Let's say we go, I think gold. One of the last times as was showing the gold. Let's say go gold, and we can on structure daily and backtest it, basically prime conditions on daily on the gold. So basically, so this is daily, right? If you go like monthly for X, so basically this is daily, and this is from April. So this is March. So you can see how many days we had a bullish prime setup. So basically what you're looking, that's your bias 2.0, man. That's your bias, like, you're looking for what? Golden templates, manipulation lows. You're looking for, low the day setups. In sync with the structure, in sync with the power index, targeting liquidity higher, right? If you go this, we change to monthly. So now we are tracking monthly structure and power index conditions. Let me just update it. So look at the monthly structure and power index. Actually, let me change on the monthly, remove this. So just quickly, so there you have your monthly liquidity, monthly structural break, monthly power index. It just been trending on monthly time frame like crazy. So you're utilizing multi time frames in sync with monthly, weekly, daily, you get really high setup trades. So let me disable this, back to daily. So like I said, it's really cool tool for backtesting. I don't need market structure anymore, and we back to, let me reload on 1 hour. On 1 hour, and the range tool. So we will now walk through the range version of screener. So range version of screener on the settings, so you can ignore this, because once you enable range, it will take only in count the GT, which stands for golden template, which will be golden templates high, golden templates low, and the first prime, which is from this setting, market structure. So market structures and power index prime displays on the first market structures version, and then the range prime setting shows on the range version. So what is the let me disable the market structures one. So basically for this tickers is the same ones, because you're keeping the same, you don't change it, but just for ease visual side I will disable. So anyways, so basically this is gold. Actually, let me leave on the gold. Where's the gold? Gold. So it shows prime condition for the range. We have a green. So how it creates, as you can see, similar like market structure, we have green, red, or failed. So green is when, so prime condition for the range, it's from the two levels. So basically, if like you see here in gold, so we track manipulation cycle, manipulation cloud. If you go in the range tool, range cycle tool, we display all the general settings, and we have manipulation cloud. So manipulation cloud basically shows where we had the last manipulations, aka peak formations. As you can see, we had manipulation low, manipulation high, manipulation low, manipulation high, and so on, right? So what's the manipulation low, manipulation high? It's advanced version of peak formation low, peak formation high. Because peak formation, it could be either fresh manipulation of previous range, or it can be mitigation of already established manipulation. So basically, as you can see here in gold, we have a green condition on the range version. So it means we have last manipulation low or high. So last manipulation is low. So, and we have a bullish open price. So basically it means we manipulated low and we reclaimed the open price, right? So whenever price is above, whenever price had the manipulation low and reclaim the open price, it will be bullish, bullish range prime condition. Basically for our golden template setups, we have a S3 setup, which is basically we have a manipulation low, that is stage 1. We reclaim the open price, stage 2, and target is opposite side of manipulation cloud, stage 3, right? So as you can see over this, yesterday we hit the manipulation high, stage 1, failed open, stage 2, and hit opposite side of manipulation cloud. So stage 1, 2, 3 complete, 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 stage 1 already reclaimed, stage 2, 3 complete, 1, 2 failed, 2 complete. So whenever we have a bullish stage 2, we have green prime, bearish stage 2, so basically bullish stage 2 and price is above, green, bearish stage 2 and price below, red. Whenever price is between manipulation low and open price, will be yellow. Whenever price is between manipulation high and open price, it will be yellow. So basically it means it's manipulated one side, but it didn't confirmed on the open price. Why we using open price? Because open price is the one which determines this range will be developing bullish or bearish. That's the main reason why we're utilizing the open price. And basically S3 Stage 1, 2, 3 concept is basically our way how we read the range rotations from one side to another side, aka basically manipulation cycle. Once you finish stage 1, 2, 3, that manipulation cycle is done, and you can see manipulation, 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 and so on, so on. And then there is specific manipulation / mitigation setups, what we specifically look like double manipulation or manipulation breakout continuation, and so on, so on. So that's regards manipulation, prime condition for the ranges, when it's bullish, when it's bearish, when it's in transition or failed. And then we have two columns of golden template high, golden template low. Golden template high, golden template low is basically as we have a daily in time frame. So golden template, whenever we have a high of the range and manipulation high, or low of the range, manipulation low. So that will be golden template. Let's say we want to see, as this is daily, so daily golden template high and low will come either from manipulation on daily time frame or manipulation from 8-hour time frame. So if we go back to range tool, we have a setting there which says GTs, which is golden templates. We go to daily plus, so it's gonna show daily above golden templates, and so it shows on the chart whenever we had the established low of the day plus manipulation low, or high of the day plus manipulation high, right? So as you can see, we on a 1 hour chart, but this same thing will work on 1 minute. So basically whenever we have a low of the day and we close back inside in the manipulation low, that's the golden template. So you can see low of the day, high of the day. Over here you can see it didn't close above the daily. That's mean over here we had 8-hour sweep. Why we track 8 hour? Because 8 hour is obstacle time frame for daily. Daily can't go higher if 8 hour is starting move lower. 8 hour is session range for us because it displays New York, London, and Asia. As you can see here is the same. We had a previous 8 hour, we swept it. Over here we had low of the day, low of the week, and we came back inside, pin below, close above, and this shows this candle established weekly golden template. Why weekly? Because that's low of the week, and we had manipulation low on daily. So basically it's daily is obstacle time frame for weekly, and that's established weekly's golden template. So what is anticipation? Anticipation, we will have a weekly's range rotation. So yeah, that's, and over here, so basically on this screener, what does it shows us? It shows us when the golden template was established. So because we are on hourly chart, it will show as the lowest previous hour whenever we establish last golden template on high or low. As you see on the gold, it shows we had a golden template high previous hour, and golden template low was established previous 8 hour. So we can see golden template high because of sweep of 8 hour was established previous hour because this hourly time frame, and golden template on the low side was established previous 8 hour. So whenever you on like 15-minute chart, and if it's been established last 15 minutes, it will show it's done been established like this previous 8 hour, like this gold previous 8 hour. As you can see, that's been established 1 o'clock. So as soon new 8 hour starts, it will say okay, that was established in previous hour. If it's like on beginning of 8 hour, it will show it was established previous 15 minutes. The new hour changes, it shows previous hour was established. So why it's important to know when so basically how we track it. We ask ourselves, did previous range done any significance? Does previous range low or previous range high establish any significance, right? So let's say here on wherever we can go, I don't know, just for this will probably load. Anyways, let's say on you had established this low, you know, we have a golden template on low on 15-minute candle, right? Or let's say actually cover the same. So we have a notification, or you know, we see, okay, previous hour established golden template, right? We sweat below, close back inside, pin below, close inside. So what we're anticipating is like we want to see does next hour, if this hour opens and shows previous hour established, hour established daily's golden template. So I am anticipating if this is true low, I want to see sign of strength for next hour, low of the hour for pushing higher, right? And what we can see here, we have golden template and we fail to close below hourly range. So what does it mean? That means this is just pullback for daily range to go higher, right? We reclaim time rotated this daily, you know, not really time rotated because it's not bullish or pin bar, but in lower time frames definitely it's like time rotation. So basically we reclaim the daily open. So basically it's mean what I want to see whenever I check for low of the day, high of the day. So basically you want to see whenever a new session starts, did previous session establish low of the day, high of the day? Did previous 8 establish low of the day, high of the day? If previous 8 established, that means next 8, low of the 8 need to respect previous 8 for continuation, aka multi-time frame order flow, right? So if we switch this to weekly, so that means every single day I will be interested, does previous day establish high of the week, low of the week's golden template, right? Oh, I changed the wrong one. I need change range one. Just this way. So we can quickly, so basically every day, so every 8-hour session, you can screen does previous 8 establish high of the day, low of the day golden template. Every day you can check does previous day establish high of the week, low of the week golden template. Every week you can check does previous week establish high of the week, low of the week, high of the month. So every week you can check does previous week establish high of the month, low of the month golden template, and so on, so on. Every month you can check does previous quarter establish every month you can check does previous month establish high of the quarter, low of the quarter. Why? It's just simply anticipating if this previous range establish, let's say previous day establish low of the week and close back with manipulation. That means next day we are looking for low of the day. If this is true, low of the week, the next day we are looking for low of the day, continuation of the weekly's manipulation cycle, right? Actually, we can quickly have an example of that while this range tool is loading. Like I said, it takes a bit time for range tool to load in. So we can go disable the, let's say weekly golden templates, and we add weekly's manipulation cloud and daily's manipulation cloud. Actually, we don't need weekly's manipulation. We just need, so weekly golden templates will come from where? When we have a low of the week with daily's manipulation, right? Daily's or weekly's manipulation. So basically we show yesterday, this is gold, so in gold it will show, yeah, like here. You can see on gold it shows weekly's golden template was established yesterday. Both weekly's golden template high, weekly's golden template low. So basically if you have only one, let's say like doesn't matter. Like this one, we had the low of the week, weekly's golden template. So obviously you looking for next day continuation, right? Same as here we have. So basically, when we have both sides, weekly golden template high, weekly golden template low. First, I will from new day's opening, I'll be looking, okay, where is the open price? The highest probability setups when we have an open price really close to manipulation cycles low or high. As you can see, manipulation high and open price is really pulled all the way up to the manipulation. So that's easy time rotation trapping completely cycle. Here's the same open close and look at the price action. Where's the price action comes? Not just what the previous range established high or low golden template, but then what's the last one they done. So the last one they is done manipulation low, and then if as far as open price holds, it's potential for pushing all the way up. All right. So over here, this one we had the manipulation weekly's golden template low, and next day we already hit the high. We have a daily's manipulation high, and open is failing, right? Open is failing. As you can see, we have a weekly's golden template. So that was Friday. Is it? Oh no, that's new week, Monday. Yeah, that's new week, and we have high of the week, a weekly's golden template. And then open price fell. Obviously, we are pushing another side. Similar. That's not low of the week. That's Monday. So basically, this is low of the month, low of the week. So low of the month, low of the week. Sweep that is probably on the weeklies, or actually, yeah, this is weeklies. Low of the month, and there is weeklies cloud. So that means weekly's golden template. So next day we want to see sign of strength. Reclaiming level, sign of strength, sign of weakness. We reclaim the level, sign of strength. We fail the level, sign of weakness. So hope it explains regards that. So yeah, every day you check, does previous day establish weekly golden template? Every session you check, does previous session establish daily golden template? Every week you check, does previous week establish monthly golden template? And so on, so on. That's how you can filter out. That's how you filter out golden templates. Then how it's linked together. So we have a market structures bias where the market structure is established, and if we have prime conditions. And then golden templates is basically manipulation cycle, manipulation highs, lows, right? So if we have a established prime condition for the bullish market structure, so obviously you want to target golden templates low, right? You want to target low of the range golden templates, because that range will be in sync of market structure, because range's job is to deliver market structure's intention to target that higher liquidity. So you're looking for golden templates of low of the ranges. Whenever you have a golden template high at high of the range against the prime, you understand that's his counter trend trends. That's the counter trend trends. And also an audio is moved. No. That's the counter trend trends. So so that's why you want to look for golden templates in prime conditions. Whenever you have a counter trend golden template, you simply playing we simply gonna play golden templates. We're gonna simply play scalps, session scalps, and the highest probability will be with the triple highs, triple lows, right? With triple highs, triple lows, this will be highest probability session trades, and you wanna clearly focus on like here, you know, as an example here, we have a prime condition, bullish power index, bullish market structures break. We are looking for these golden templates lows, golden template lows, golden template low, golden template low. For higher prices, target that structural liquidity. But whenever we have golden template high, golden template high, golden template high, we are playing simply S3 setup. So basically stage 1, 2, 3, stage 1, 2, 3, stage 1, 2, 3, right? And then if it's example here, because we don't know that golden template high when it's against the prime condition, against the trend, does this will be just a manipulation cycle, or it's gonna start to move lower, retesting power index, retesting last market structure break, or target, you know, the next liquidity, right? Or in this case, it's swept already structural low and established bearish break. So this could be just pullback for moving lower, or this is failed breakout and we're gonna target the liquidity above here. So that's how we link together market structure and range. So you're basically delivering ranges job with market manipulation cycles. Job is to deliver market structures intention, targeting high liquidity, targeting lower liquidity, and so on and so on. You can obviously use either just market structure and then just the ranges, but for that purpose you want to, if you're using just market structure or just ranges, you want to base that as a multi-time frame logics. So basically lower time frames job would be deliver higher time frames intention. So let's say if you're using just market structure, let's say on daily, you will utilize lower time frame. Sorry, this is range. If you're using just market structure, right? So if you will utilize like lower time frame, you know, maybe intraday, 30 minutes, 1 hour, 4 hour structure and liquidity sweeps and fail breakouts and breakouts with the aligning, let's say if you're using, I don't know, 1 hour, so you would want to see how 1 hour delivers this daily's intention, right? And same for the ranges. If you're using like adjust the ranges, you want to see how lower time frame ranges delivers high time frame manipulation cycles on high time frame ranges. So that's it regards the market structure screener. We can get rid of this one and add the tracker. Again, can add it twice. Disable one, enable another one. So tracker is again functions is similar as tracker functions similar like screener ones, just few visual differences. So over here you can track up to 26 tickers. The same thing, you can click and change the column of assets 1, 2, 3, and up there the same time frame change you can track, and options market structure or range. Let's cover the range itself. The first one, so basically you have a, what's the difference here? So basically we are tracking the real price for all the 26 pairs. So that's market structure version. Click this 11 to 20, 21 to 30. Yeah, so it will load in. So you can see we have a 26 stickers pairs, and you can see little channel kind of in middle. So what's that channel? It's basically market structures cloud, right? That's the market structures cloud. You can see it says accumulation. So whenever price is inside in this cloud, it's basically we in the accumulation phase. Whenever price is above, that's bullish distribution, below it, bearish distribution, right? So if I let's go AUD CAD just to see example AUD CAD. So if we AUD CAD and let it load in, I know we need signal box market structure, so we go on daily and add market structures cloud. So we check this first. So basically what we see so again this displays the same as on the actually we can go here on one hour time frame. So you can see prices inside of the market structure cloud, we above the daily power index, and we above the market structure's bullish break, right? So basically we have a bullish break, bullish prime setup because we are above it. So basically it's, as you can see, move back inside in the cloud, market structure cloud, so it's reaccumulating. Whenever it was up below 50%, that was bullish ICI setup, right? Impulse correction, impulse for anticipating higher, so we're looking low today. Over here, so basically on the tracker function is like to see where's the current price. The current price displayed by the arrow. If we go in the settings right there again, we have here similar like on the screener, like 3 options to see is that inside bar, first green, first red, or triple lows, triple highs. So basically this white bar will be colored. This white bar represents current day's high low, so basically it represents where the current bar moved today, right? So we can see the dot, so we can see, okay, we inside, so price, the dotted line and dot, that's the opening price of current day. The square thingy, rhomb, that's the power index, same as like here, daily power index. So it shows where the power index is representing to the cloud. So it's inside, but like the dashed line in the middle, that's 50%. So we know whenever price was below that 50% in the cloud and we have a bullish trend, that will be bullish ICI, right? So you can visually instantly see, okay, where I am in respective of the market structure. So it's mean like, okay, I opened, I move lower, and then pushed higher, right? So as you can see here, we 620, so we opened, we moved to the power index and start to move higher, right? So and that's, so basically that's represents the bar, the high low of the day, open the current price, the arrow, open price and power index, and this represents where the market structures bullish or bearish breakout based market structure storyline. So we can see we been trending because we're going up. This bracket same shows the contraction, volatility, and so on. And whenever bars gets colored, that represents if we have inside bar, first green or triple lows, right? So it basically means triple. This is first green, first red, triple lows, and a yellow inside bar, and so on. So what I specifically using for this, because I'm getting all this info on the screener, right? And that's easier for me to adjust whatever you want. Over here, what I'm interested is whenever new day opens, I'm interested if the new day opens really close to the edge of the market structures cloud. Why? Because remember, what is the edges of market structures cloud? That's the first market structures liquidity where it sits, right? Whenever prices you see like see this being like coiling down, man, like this, like look, we have structural low, structural high, it's coiling down. So it's basically in contractions. Is it in contraction stage? Yeah, it's had a bracket, so it's contracting. Market structure is in contraction, but if the price daily opens like really close, so in the morning when I check does the current price and open price is really close to one of the sides of the cloud. Why? Because that's the easiest to flip the daily range, and that's the easiest manipulation low or manipulation high for expecting liquidity. So basically it's quickest and easiest liquidity sweeps. Any examples maybe of this? I can't see where is the current open price, but open price is for anyway, so basically it could be breakout, so whenever open price is really close. Hope it makes sense. So that's the main purpose for seeing, and other people like to see whenever price moves, where it moves and so on. So does it in breakout or, stuff like that. So basically this allows you to track market structures, cloud, and current price, comparing with the, power index, market structure, and opening price. So that is a market structures version. Then range version, actually go back to market structures version. Over here it's the same market structures version, so that's market structures version. Over here you can disable, enable inside bars first green first red, so it can not display that. If you want disable market structure, power index, high low, so basically everything, and just leave the market structure, cloud, and open price example, right? So it will look literally like this. You can see, oh yeah, you can see how far is the every news day is open, or every weeks or whatever, every 8-hour sessions, right? I usually keep high low, which basically shows me the current range and where is the open price. I'm thinking in the future probably add the function like filtering, like show only, you have all enabled, and show only where current price is like X percentage of the edges. Like, okay, add like filter out when the current price is like 10% at the market structures, cloud, or liquidity side, right? So above it or below it. So basically if I had this, so it's only will show this, so basically prices at the edge, right? So why it's important at the edge? Because remember, that's where you have a liquidity first. So but whenever you inside an accumulation, that's the where you will have a breakout or liquidity sweep, right? So that's where you will have a breakout, liquidity sweep, right? Liquidity sweep. So basically whenever price is around the edge, right, these are two things: either it's gonna liquidity sweep, fail break, or it's gonna establish breakout. So that could be really useful, because in the future we will start to work on more complex alerts, complex signals, which basically will be whole chain of events to lead to specific setup and stuff like that. So that will be really useful. So now let's go to range version. Again, same like on the screener, pretty much the same functions. Instead of the market structures cloud, we're gonna track the manipulation cloud, aka manipulation cycle. You see, manipulation high, manipulation low, and we on the same AUD CAD. It shows the green, that single dot, that's for prime condition of the ranges, right? So what does it mean? It means we about the manipulation level and about the open price, right? So basically if we about the manipulation high and open price, that's potentially we're starting to break out of the range. As soon this will fail below the manipulation high, we below manipulation level and open price, that will be yellow. When we have manipulation high and we fall below the open price, that's stage 1, stage 2, that will be red, right? Oh man, AUD CAD. Oh, that was yesterday. Like, you see, we have a double manipulation setup. Manipulation low, 1, manipulation 2, high, 2, manipulation low, mitigates to number 3, mitigates number 1 for explosive move. Nice. So, and on the tracker again, what I'm checking specifically, you know, because I have all these prime conditions on the screener. Here the same thing. I'm checking where from what, because stage 1, 2, 3, aka manipulation cycle, you know, manipulation cycle complete, manipulation cycle complete, manipulation cycle complete, manipulation cycle complete, manipulation cycle complete. It's constantly stage 1, 2, 3, stage 1, 2, 3, stage 1, 2, 3, stage 1, 2, 3, right? So what triggers that, you know, golden templates. So what I'm interested when the current price again is close to the edges of the manipulation cycle, because either it's coming for mitigating or either coming for manipulation, right? And you can see this pair hit the low, hit the high, so it's completed manipulation cycle, stage 1, 2, 3. As you can see, where's the open price? Open price, it's opened nearby the manipulation cycle low. It hits the low, reclaims the open, bullish range, hits the opposite side. Stage 1, stage 2, stage 3, manipulation cycle complete. So again, I'm interested wherever open price is really close to the edge of the manipulation cycle, right? Like this one, this obviously gave the breakout, now it's pulling back. Like this one, obviously I'm really focusing on liquidity sweep manipulation cycle, so I'm more interested in reversal trades instead, like breakout trades. So this is perfect example, this is perfect example. Sweep the low, what, stage 1, 2, 3. This kind of opened outside and reclaimed the manipulation cycle and went hit the another side. This one open, swept, completed, open, swept, completed, and so on, so on. And here regards the settings, we have a, so you can so yeah, it shows high, low, open. Market structure power indexes doesn't work for range version. On range version, except open price, it shows open, except high, low shows the, you know, current range and open price. We can add FV or overvalue, undervalue, or fair value. Fair value, basically that will add the daily VWAP, you know, that time frame's VWAP. So basically we are looking where the fair price, and as you know, overvalue, undervalue, that's high of the range, low the range, VWAP. So we're looking what does it in undervalue or fair value, undervalue or overvalue. On daily, on this 1 hour, it's, you know, not the best, but on lower time frames, like I think this range tool you can still see on 15 minutes, maybe below, like this tracker. I don't remember already. I think because I'm using a 15 minute, but I think I'm not sure if I tested on low time frames. Anyways, so on higher time frames like undervalue, overvalue, and fair value, VWAPs is really good, cool way to what's called to track it. Let's say, you know, like monthly, so you can easily track where's the monthly's range regards the manipulation cycle, where you are in the monthly's range manipulation cycle as soon as it loads in, and then you can see, okay, where is the fair value of the monthly's VWAP basically. And you can see here is like multiple manipulation cycles finished, completed on monthlies, like on this, you know, and this, maybe some more. And so basically why we are tracking the fair value VWAPs, because, you know, when we kind of complete manipulation, we many times have a pullback back to, you know, opening price, back to fair value VWAP for continuation, right? So this way you can track through the all pairs, like, okay, where is the fair value VWAP? And same for undervalue, overvalue VWAPs, which we are using as the one of the strike zones for our entries. So I think we covered everything. We covered the same here, like you go to the info section, you will see all the info right there. On the bottom, warnings: only apply the screener and tracker on live charts, so not on the when market is closed or weekends. If you want on weekends, only use the crypto. The best, choosing the tickers. If you're using like Forex, track it on screen it on the Forex pairs instead, like, you know, viewing like Bitcoin on the Forex or on the you know, the Forex pairs on the Bitcoin, because the time changes, candle changes in different times, so that will, you know, skew up data in like, you know, some errors and stuff. So basically it's not for backtesting, it's just for live data screening and so on. So if any bugs or something, obviously let us know, but that's, you know, pretty much with what we specifically using for filtering out anticipating manipulations via tracker and screening after the fact the pairs when we have already prime conditions, when we have already established golden templates for continuations, if we have a signal ranges like triple lows, triple highs, and golden templates anticipating pullbacks or, you know, manipulation cycle, maybe for early signs of reversal, and yeah, and stuff like that. Any questions, Nelson? So yeah, pretty much we're wrapping up the session. So we walked through everything on the tracker, on the screener, the settings, the options, how to utilize. Also walk through the, you know, how to backtest it, the signals and you know, signals and prime setups on the range tool, on the market structures tool, or the signal boxes, you know, how to visually see and backtest it, and so on. So yeah. Did you discuss the difference between price action versus all? Price action versus all. What you mean specifically? The golden templates. Not really, because on the screener, all golden templates will be by default all. It's not gonna be price action. It will be by default all. I'm even thinking, like, does there is need for price action, because, you know, you kind of can filter out. And I have some another I already forgot. I have a idea, because I will build the Ultima alerts, where basically all alerts will be built in one separate tool. And on that one, I think I will remove the price action, because just leave the all, and then it will be specific time frames, not like daily and above, because I was getting feedbacks that basically when you get alert, you don't know that's the daily, weekly, or monthly, whatever. So it will be set by specific time frames, and we will remove the price action most likely, but we will add the option where you can filter out the golden templates, either prime condition or counter trend. So that's, I think, will be way better, right? So that's kind of the idea. But regards the screener, it basically shows whenever you have a golden template. So it's basically, you know, hive the range, close back in range, right? Hive the range, love the range, back inside manipulation, basically. Stuff like that. And yeah, manipulation cycles, man, that's the, you know, that's the one of the best. And like today I had a beautiful hive the day. Like my entry was right there for arrow, like right there, daily golden template. If you go quickly in the settings and we add golden templates and daily, this exactly, like that exactly where I shorted. I shorted the fucker like all the way down, took profit, and then left the runner. So runner is there. So I was interested, okay, what the New York's 8 hour does. You can see that's the opening, so it's still kind of pullback. But there was, I think there was daily's power index. Oh yeah, it was here. So it's there's daily's power index was running around. So, and you can see now, like we have market structures. You know, obviously that's bigger is like market structures cloud, which I never use. And you know we have a daily power index bearish, market structure bearish. So basically that's prime condition. If that stays intact, right, and we are opening tomorrow, wherever open price, and we fail that, like what the daily ranges does. What is range's job? Range's job is to deliver market structure's intention. What's at the moment is market structure's intention? Prime condition bearish, target this liquidity, right? Or we gonna fuck around, create new structural point, hit, or create new and establish bullish break and go high, right? Just looking from manipulation cycles, where I'm interested, like this point here. Why? Because this is the manipulation, this manipulation low, which is responsible for this pump. Oh, actually we had this one, the last one, right? And it just blow through, which is beautiful. So next one I'm interested in this, you know, potential demand zone. Like old manipulation zones I use as the supply demand, because that's responsible for the pump, and so on so on. Anyways, let's wrap it up. Yeah, I had no drawdown. It was 1 bar entry. It was 1 bar entry, like on 1 minute. On 1 minute it was, if we go quickly in 1 minute, and it was 30-minute. It was 30-minute manipulation cycle, double manipulation cycle. Is it 30 minutes or 50 minutes? One of these, it had, I know it was somewhere here, I'm not sure. Anyways, like, need double check. Like my entry was based, or maybe that was just a pullback to the high of the day VWAP, maybe high of the range VWAP. So anyways, so basically between 7 opening, like over there. So yeah, I think Sculptor shared, maybe she had because she had similar GBP USD trade, and I think maybe hers one was double manipulation. Basically, just let me quickly check GBP USD and 7. Yeah, maybe that's the one. Yeah, correct. So we had a daily's manipulation high, and then she got right there. Manipulation 1, manipulation 2, manipulation 3, 3 mitigates. Like you can't get fucking better entry right then. Just absolute nosedive down, right? Like beautiful. So yeah, that's it for this. Thank you guys, and see you the next one. Bye 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 bye.